Hey, what is going on everyone? My name is Nick, and in today's video I'm going to be sharing one stock that I just recently made into a nearly 50% position in my portfolio. This is by far the biggest position in my stock portfolio now, and you might be thinking I'm absolutely out of my mind for making one position this large. But the amount of conviction that I have in this company over both the short term and the long term is unwaveringly strong, and I will be sharing why in today's video. So without further ado, let's get straight into the video right after you obliterate that like button just like our portfolios have been the past few weeks, and if you haven't already, please consider subscribing for more content. Also, I just wanted to let you guys know that I recently launched my very own Patreon page, where you can choose to support me and gain access to exclusive perks such as my stock intrinsic value calculator, a Discord investing community, and much more. You can check out the link in the description or the pinned comment below to join Patreon, and if you join today, you won't have to pay for the rest of the month, so it's a pretty good deal. With that being said, the stock that I've made nearly 50% of my entire stock portfolio is Tesla, and that shouldn't be a surprise to a lot of you. Today on Monday, Tesla stock closed at $787 per share, now being down 36% from all-time highs, yet the business has done nothing but exceed expectations the past few quarters. And even though the stock could fall further from here, I'm definitely not calling a bottom by any means, but I still think the stock market is severely undervaluing this company at the current prices. Now when it comes to diversification, I do think it's very important to hold more than one or two stocks in your portfolio, but I also realize that diversification is not the fastest way to wealth creation. In fact, Peter Lynch, one of the greatest investors of all time, likes to call it diversification simply because you're usually better off investing in an index fund than creating a well-diversified portfolio. We can also see here that 40% of Warren Buffett's portfolio is made up of Apple stock alone. So is he not diversified enough? Furthermore, I believe it's very important during bear markets like this to concentrate more heavily into your highest conviction positions, and then in a bull market to diversify a little bit more once those positions are more expensive. So with that being out of the way, let's talk about my 4 reasons why I've made Tesla stock my #1 buy right now in 2022. And the first reason is because of the industry trends. There should be no question nowadays that EVs are the future and that every single ICE vehicle on the road today will, and I repeat will, eventually be replaced by an EV. Now here's some proof showing why that transition is well underway and accelerating, and why Tesla is so far ahead of their so-called competition. The first thing I want to show you is how quickly EV market share is growing worldwide. Just look at this exponential trend in Tesla's market share growing across the 3 biggest auto markets in the world, the US, China, and Europe. Furthermore, we can see here how Tesla is producing the most EVs out of every automaker globally, which should continue for many years as they've secured more long-term material and battery supply contracts ahead of all other companies. The second and most obvious trend is that EVs are better for the environment. Even after accounting for the entire life cycle emissions of a car, including the manufacturing phase, Tesla's EVs come out far on top of the average premium ICE vehicle. So anyone telling you that manufacturing an EV produces much more emissions than an ICE vehicle is just flat out wrong. Next, the third trend is that EVs are far safer than their comparable ICE vehicles. EVs have a much lower center of gravity than comparable ICE cars because the battery pack is beneath the floor, and that essentially reduces the rollover risk. And from Tesla's 2021 impact report, we can see just how far ahead they are when it comes to safety in their vehicles, having the highest safety rating of 94% among all automakers. Furthermore, we can see Teslas are involved in far fewer accidents per million miles driven by the average driver in the US due to a Tesla's safety features and intelligence. Fourth, we're at the point where EVs are becoming much more cost competitive than before. Again, we can see in Tesla's impact report that the total cost of ownership of a Tesla Model 3 after 5 years is already lower than that of an equivalent premium ICE sedan, being a BMW 3 Series, and it is quickly approaching the cost of a Toyota Camry already. As soon as EVs are at cost parity with high volume ICE vehicles, consumers will have to be brain dead to continue buying the equivalent type of ICE vehicle. And there are so many more trends I could mention about why Tesla is an amazing company compared to all of their competition, such as how fast the cars are, or how much more efficient Tesla EVs are compared to their other EV manufacturers, but I just wanted to keep this video short and to the point. Alright, now the second reason Tesla stock is my #1 buy right now is because Tesla still has incredibly strong demand, and they spend $0 on advertising to achieve it. Despite recent price hikes on top of inflationary pressures, demand for Tesla EVs is still through the roof. In fact, Tesla is actually benefiting from their competitors advertising EVs too, as shown here in their Q1 earnings report on how demand spiked the day after companies like GM and Ford launched Super Bowl EV ads. Anyways, let's now take a look at how long consumers are willing to wait to purchase a base model Tesla EV. Starting with the Model S, wait times right now range from October 2022 to January 2023. 2023, this is 5 to 8 months away. Now the Model 3, wait times range from August to November of 2022, this is 3 to 6 months away. For the Model X, wait times range from January 2023 to April of 2023, this is 8 to 11 months away. And finally for the Model Y, wait times range from November 2022 to February of 2023, this is 6 to 9 months away for a very high volume vehicle. So the fact that Tesla's demand is ranging from 3 to 11 months away for all of their base model EVs that they sell just speaks for itself. Tesla cannot keep up with their demand, and it just goes to show the company is purely supply limited. This also shows how people are willing to pay far more for a premium product in today's market. And I'm not even going to get into the reasons why Tesla offers such a compelling product in this video, it would just take way too long. If you do want to find out though, you can check out my video where I take a deep dive into Tesla's 7 moats. Alright, now the third reason I'm buying Tesla stock right now is because of their massive growth. So take a look at this. Tesla grew revenues 81% year over year in Q1 2022, and they grew EV deliveries 68% year over year. Meanwhile, most other automakers saw their sales decline in double digits year over year. So when you hear people saying Tesla's massively overvalued because it's worth all of these car companies combined, well, it's because Tesla is growing massively and these other companies are actually shrinking because they have dinosaur business models. And as we can see, Tesla's total gross profit grew by 147% year over year, being much faster than revenue growth despite inflationary pressures. Furthermore, Tesla's operating margins expanded from 5.7% in Q1 2021 to 19.2% in Q1 2022, meaning Tesla over tripled their operating margins in a single year. That's a result of Tesla only increasing their operating expenses by 15% year over year, despite their revenues growing like 81%. That is just insane, guys. Think about that. And of course, all that operating profit translated to Tesla's bottom line, where their non-GAAP EPS grew 246% year over year to $3.22 in Q1. Overall, this company is becoming insanely profitable, and every single metric that matters is growing massively in the right direction. That leads me nicely into my fourth and final reason for buying Tesla stock today, and that would be for its valuation. I've said it before and I'll say it again, Tesla stock is incredibly undervalued at today's prices, and here's why. First of all, if we add up Tesla's non-GAAP EPS over the trailing 12 months, it comes out to $9.07 right now, and dividing this number by the stock price of $787 per share, that means Tesla has a trailing PE ratio of only 86.7 today. Keep in mind, that's come down from like 600 only about 2 years ago. But that's also only half of Tesla's valuation, so what is their forward PE ratio right now? Well, if we assume that Tesla does not grow their EPS anymore in 2022 and they just have their Q1 2022 EPS for each quarter in the rest of the year, let's just forget the fact that they grew EPS 246% year over year, we would get full year 2022 EPS of $12.88. Now, dividing Tesla's stock price by $12.88 of adjusted EPS, we come to a forward adjusted PE ratio of only 61. Guys, let's just put that into perspective for a moment. Tesla just grew their revenues 81% and their EPS 246% year over year in Q1. And they still have unlimited demand to boot. Now in 2021, Tesla produced adjusted EPS of $6.78, so this would imply 90% EPS growth in 2022. Meanwhile, their forward PE is only 61. That means Tesla stock has a price to earnings growth ratio, aka a PEG ratio of 0.68 right now. That is insanely cheap. Now let's compare that to some other large cap stocks like Apple, for example. Apple has a forward PE ratio of 25 and EPS growth over the next year expected to be 9.4%, call it 10% in 2022. Well, that means Apple stock is trading for a PEG ratio of 2.5 right now. Or in other words, by dividing the PEG ratios of these two companies, we can see that Apple stock is trading nearly 4 times as much as Tesla stock when factoring in each company's earnings growth rate expected for 2022. And that, my friends, is why Tesla stock is cheap at a forward PE ratio of 61. Investors just simply don't understand these growth rates, and just because Tesla has a trailing PE ratio above 100 does not mean the company is overvalued. In fact, it is undervalued right now. And just to show where my conviction's at, guys, I actually sold some Google stock today to buy more Tesla stock because I see much more upside in Tesla over the next 5 to 10 years than I do with Google at the current prices. In conclusion, there are so many other reasons why I'm buying Tesla stock right now and why I've made it 50% of my portfolio. I just can't include all of the research in today's video, but I would recommend you check out the video where I took a deep dive into Tesla's 7 huge moats that they have right now. Anyways, let me know what you guys think about Tesla stock right now. Are you buying or are you selling the stock or just doing nothing? I would love to hear. Let me know down below. Also, if you did enjoy the the video, don't forget to like and subscribe. I really would appreciate that, and I will see you guys in the next one.